All right, here we go.
Let's get it.
Marriage gets hard when you disagreeing. When God's in the center, he's refereeing. Talk about triggers and traumas while having date nights at the gym and the sauna. To business meetings discussing the health of the wealth to the season of commerce.
New beginning, prosperity, abundance. Family will continue to walk by faith, not by sight. We know that God will supply.
What's up, good people?
What's up?
Welcome to another episode. I want to say this is episode 4. I like counting the episodes.
It is episode 4. Yep.
Yep. Welcome to episode 4 of Marriage, Family, and Business. I'm Katina,
I'm Vernon.
and in this week's episode,
Hold on, before we go for it, we have Journey in this playpen right here. We might bring her on at the end so you guys can see her, but if you hear a little holler or something here and there, she's in there having fun with her toys.
yes, she is having a ball. We tried to have her, like right now, she's like screaming. I don't know if you guys can hear it, but it's a fun scream. But we had her in our lap, and we were gonna try to film like we did before.
Nah, she getting older. She's talking.
She wasn't having it. She started talking only when we would talk. Now, when we were quiet, she didn't say that. But as soon as I started talking, she, yeah. So we had to put in her playpen, and we'll try to get her on later because she got a cute bow on, and she
Yeah.
wants you guys to see her new bow.
Yeah, we'll cut it out and bring her back on for the outro.
Right. All right. So for this week's episode, this month, the month of September, is Life Insurance Awareness Month.
Yeah,
Ooh,
yeah.
Clap the hands. Clap the hands.
Oh, sorry.
Yeah. So, in lieu of Life Insurance Awareness Month, our goal, our mission today is we're going to give you a life insurance one-on-one lesson. Now, I know life insurance, people like to shy away from it or they simply don't understand it. But for the most part, a lot of times people think it's really, dry. You know, it's dry to talk about. So we're going to talk about it, be as real, as honest, sprinkle some humor in there as we can make the situation so light, because life insurance doesn't have to be a heavy topic and a heavy conversation. It doesn't have to be, but it is important.
Yes, it is very important. I believe that anybody that has dependents needs to know what life insurance can do for them while they're living and when they pass.
Also, people who don't have dependents. If you're single, you're not dating anybody, you don't have any children, at the end of the day, when that time comes, who is going to take care of your endeavors? Who is going to take care of anything that you have in place? If it's your parents or whoever it is, you still need to have some things in place. So let's just get started, babe.
Yep.
You ready to get started? So
let's
let's
do
get
it.
started. The first thing I want to do is ask you, okay, what is life insurance? Like, if someone were to ask you, do I really need this? What would you say to them?
I would say that life insurance is a contract where you, the consumer, pays premiums to the insurance company, which the insurance company then promises you a death benefit. And in the case of what we do with new life insurance is living benefits that allow you to use them while you're living.
Okay. So for those people who may have old life insurance, they should probably
Yes.
contact us if you have old life insurance. So pretty
Look.
much new life insurance, he says, has living benefits. So if your life insurance does not have living benefits, and as we discuss what these living benefits are, if it feels like that's something that you would need, let us know so we can look over your old policy to see if you can get some new life insurance.
Yeah.
Go ahead.
What most people don't know is we can usually save them around 30%. And if we can't save the 30%, what we'll do is we'll be able to add value for the cost that they're paying, or maybe a little bit more or less, depending on what their situation is. So.
Okay. All right. And so with this life insurance now, you said that it's a contract. You're paying a small amount for a big output.
Yes.
Now, as we were both studying life insurance, we learned that there are different types of policies. There's different type of life insurance they can have. So discuss that. Let the people know, like, what are the different types of life insurance that an individual could have?
Well, I can, before I even move forward, like the contract is aleatory, meaning that the consumer puts in less for more. So if you putting $50 in a month and you getting a $500,000 policy, by time the end of that term of that policy hits, you've still paid less than $500,000. So if you pass before that term, if we're talking about a term policy, which I'll talk about first, yeah, we gotta take her upstairs.
That's Mike too. Like, I started looking like, why is it moving? I'm not saying anything.
Go grab her. I'll bring her on in.
All right, guys. So if it looks different, it is because we have to take her out of the playpen because
Just
she
don't
has
move-
something to say.
Just don't move the camera. We'll.
Okay.
A few moments later.
All right, guys. So we had to take a minute because we said she was in the playpen, but she started talking a lot, and we realized that my mic was picking up her noises.
So now she's on my mic.
So now she's on the mic. She really likes cameras and
She
lights
wants
and
to say
microphones.
hi.
She wants to say hi.
All right,
Say
hi,
hi,
everybody.
Journey.
Go ahead. Now you're not gonna talk.
All that talking you did. See what I'm talking about? Now watch. She's gonna start talking as I talk. See what I mean? Okay. So as you guys got some time with Journey, we probably gonna take her upstairs to watch
Holy Sprouts.
Holy Sprouts. Shout out to Holy Sprouts. All right. So you already talked about what life insurance is.
Mm-hmm.
So now, like, I remember when we first got into to studying the business, and you went into that rabbit hole of studying it. What are the different types of life insurance an individual can have, and what is it based on why they should get whatever type they should get?
Okay. So, it's all based off of what their need is, which they need to talk to somebody who's qualified to help them with how they want the life insurance to work for them. So we'll talk first with the term life insurance. That's the most common insurance out of all the life insurances. Term life insurance is like having an apartment. You'll have it for 10, 20, 30, maybe even 40 years. After that term expires, you will after that term expires, you will lose out on the coverage, and you don't have coverage anymore unless you renegotiate another contract, which then it will be based off your new age, your new habits, and all of that. Whole life can be seen as a couple different ways. We have final expense, which is how when a person is late, 60s, 70s, they're looking to have a policy that will help them with just burial. Those policies can range from anywhere from $5,000 to $40,000 that will be left behind to help them with a memorial and possibly a funeral for whatever they're trying to do. And then if you decide to do whole life earlier, many people do whole life and create their own family banks. So with that family bank, those whole life policies have a dividend, which every year that person will have a dividend of, I think the smallest one I've seen is about 2 to 3%. That's guaranteed, and then they have another non-guaranteed amount that comes to them as well. But the whole life is actually a asset that they hold. So like, say if you have, it's the difference between having an apartment that you rent and a house that you own.
Mm-hmm.
You'll own this house, and this house continues to make you and your family money. And it's a bank of cash value that you can pull out and do whatever you need to do with, whether it be invest, gift, whatever you want to do. And then what we have is our guaranteed universal life. So guaranteed universal life is for individuals that are 50 or older that are in great shape, great health. They don't have any problems for the most part. What this does is it allows them to gain more access to a death benefit, unlike the final expense plan, because the final expense plan is based off of mostly people at, just trying to get something for their funeral. If you're a 50 or above and you have money and health, the guaranteed universal life plan gives you a guaranteed death benefit, and it allows you to access more death benefit in a cost-effective way. As for the guaranteed universal life, there's another one called the index universal life, which we push on people Journey's age, which she has her own already. In that particular life insurance plan, the cash value is tied to what we call an index like a S&P 500, that would allow for the cash value to grow as the stock market grows, of course with a cap, but it protects you from any downside loss. So those are the four main ones. There's another one called variable life. We don't even deal with that,
we
but
don't,
we don't talk
we don't
about
have
it.
to go into it because you gave us a lot of information. So I want to sum it up so that people can, understand it and get a quick gist
I
of
know
what you
sometimes
explained.
I'm long-winded. I get it from my daddy.
So you said term. So term, guys, is temporary. It's like he said, it's like leasing an apartment. So term is a temporary insurance. It's like having your insurance on a lease. It will expire at some time.
Yes, it will.
And then you said there's your permanent products. You said you have the whole life, the GUL, the IUL, and even final expense is a permanent product. But with those three, the GUL, the IUL, and the whole life, there is some cash value and there's some dividends that you're allowed to pull while you have the policy. And you compared it to like having a home.
Yes, it's
And
an
then-
asset. You hold it.
Mhm.
You can sell it. Man, so many different things that you can do with that permanent policy. This is why we actually teach to have either both or pick something that you have an asset that you can do things with.
And then lastly, you said the final expense, it literally just pays for the rest in peace. It literally pays for the plot or just the actual funeral or the memorial or even the repast. If you guys want to have, the funeral meatballs, the funeral food,
Extra couple chicken wings.
mastacholi, those are like the repast foods that people generally have. So that's to sum that up. Now, with these different types of policies, you said specifically that the GUL was somebody who was 50 and older.
Yes.
So what age, as you said before, what age would you recommend for each of them, or does it matter, or is it only for the GUL?
Well, the GUL is for the permanent product, and it all depends on what that client is trying to do, whether they are trying to just leave the legacy. Some of them, sometimes with a GUL, they have a lump sum of money that they just want to take and pay for the policy. They can do that as well. It's a lot of different ways you look at it, but for term, it's usually for young people because it's affordable. If you're 50 years old and you need term, a lot of times people pick up an extra term for living benefit. So we talk about those three, terminal, critical, and chronic. Those three living benefits actually allow for you to pull that death benefit out if something were to happen to you. So that's the reason a 50 or older would get a term policy. They're in pretty good health, and they're looking for something to pad them just in case they run into one of those diseases that might be hereditary in their family. As far as age, the younger you are, the cheaper it is.
Absolutely. Now, to remind you all, or it might be new information for some, but life insurance is based on your health, your habits, and your age. So that's why people always say, the younger you are, the better, because the younger you are, one, your age is younger.
Mm-hmm.
Two, you may have better health. And three, it depends. Now we picking up habits younger, but it really depends on that.
Yeah.
But I mean, it's or we could be working on those habits as well. But the thing is that blows my mind is that people will say like, I don't need life insurance, or, it's a scam. And at the end of the day, with your age, your health, and your habits, you don't even know if you qualify for something that you're trying to deny yourself of. Like,
Yeah.
these insurance companies are like taking a risk out on you because they're saying, okay, something happens to you, we're gonna pay your family $500,000 because those three things are well, and we're taking that risk out on you. It's some that will deny you.
Yes.
Like, you know what? You're not taking your life serious, so why should we? Why should we put this much money on your head if your habits are terrible, or if you don't have this good health and you're at this certain age? So
you can have a lot of money and they still would decline you.
they will decline you. Like that wouldn't have anything to do with it. Like, oh, I'm making this much and doing this much. Like, no, if they looking at those habits, because life insurance, like how certain places when you're buying something, they do like a credit check and check your background and your credit. Life insurance, they're checking your medical background. And if they see all types of things or any type of drugs, anything, if they see that, it'll pop up. I would have clients all the time. I would specifically ask, do you smoke? Do you smoke tobacco? Do you smoke marijuana? Do you do this, do that? They like, oh, no, I don't. And I'm like, okay, you can be honest with me, because some insurance carriers will take you and some won't. But be honest with me so that I don't waste your time trying to qualify you and you don't waste mine. And what came back, they had a DUI 2 years ago. It's like, you could have told me this. Work with me, not against me, okay?
Yeah.
But that's why we're educating people so that they're aware of their options. But two, that it can be affordable. Don't think that it's just so expensive. And three, whatever lifestyle you have or habits you have as brokers, we have access to different carriers to help you. There are some people who only have access to one thing, but one size does not fit all when it comes to life insurance.
No, it does not. Say it again.
One size does not fit all when it comes to life insurance. So that's why, as brokers, if you tell me, well, I got this going on and I take this medicine and this happened to me years ago, then I know I need to go to this carrier for you. Or you got this going on and this and that, I know I can go to this carrier for you. I'm not just stuck with one thing. Okay, but I needed to educate them and let them know that information, babe. All right, so we're gonna move forward now with these different types of policies. Each policy does have their own benefits, but people also have these misconceptions. So I want to talk about these misconceptions that people have with life insurance. And the first one is, I don't need it because I'm super young and I'm super healthy. Well, that's the best time to get it. So what would you say to an individual who say, like, I'm 25 years old, I'm super healthy, I don't need life insurance right now, I'm good?
You never know what can happen. We've run into now two people who've had serious situations happen to them before the age of 40.
Yes.
One who had it, that, you know, we actually, our friend, she's actually on our page. If you go look, we have the video tagged at the end. But she went in for a routine procedure and coded on the
coded almost 5 minutes. Heart stopped for almost 5 minutes on the table.
And she came out of that with you know, not only did she come out of it alive, but she came out of it knowing that her benefits, her living benefits, actually backed her up and gave her a check that helped her get back on her feet while she was figuring it out. And then we have another friend who didn't have those benefits, who, you know, it was a struggle. She still got through it, but at the same time, if those benefits were present for her, it's so many things that she would be able to do. So many, you know, it'll make it easier, you know, for her to get through the situation that they need to get through. So you never know what you need. Not only that, at an early age, especially, you know, nowadays, because we have people who are 25 years old already making 6 digits. The discipline of taking 5 to 10% of your annual salary and putting that into a life insurance policy that can build up cash value is like the best thing you could do at 25 years old.
Yeah.
You know, we know a couple who took that money and actually saved it up over a certain amount of years, and then they had this big bank of money. They both left their jobs and started a business.
Yes, absolutely.
So, and that business is thriving.
Yes, it is flourishing. It's flourishing.
So as we, you know, move forward, you guys, you know, if you just have a policy with your job, I want you to start thinking about your future. I want you to start thinking about your exit strategy, because you're going to need one. especially with jobs laying people off all the time. Your job is not going to be a permanent thing. You need to get that in your mind. Even if it is a permanent thing, you want to make sure you have the power to do what you need to do when that time comes.
Absolutely. I'm happy that you segue into employer life insurance. So here's the question I'm going to ask you. And as I'm asking Vernon, you can answer it yourself. When you had your employer plan and you signed up for your health insurance, what did they give you?
When I signed up for my health insurance with the job, they gave me benefits. So I saw my benefits of what I got and what the copay was and all of that. So I didn't really, I got a big old packet when I first.
With a medical card, right?
Yeah. Every time I signed up for one, they sent me something with a medical card, letting me know these are the new benefits for the next year or the next cycle of whatever that contract was.
Now, what did they give you for your retirement, your 403B? What did they give you when you signed up for that?
So for my 403B, they gave me a packet, and then they told me to set up a online portal for my provider, so I can go in there and I can figure out which stocks I wanted things to be put into, and what strategy I was going to take it to, so I could talk to the broker through my app. They gave me all of the logistics of how to get in contact with them if I needed access to the money through that 403B.
Now, what did they give you for your life insurance?
They gave me confirmed.
Exactly.
On my on my portal, it's like because it was 25,000 is what they give you as a minimum. Mm-hmm. What I would do is I always max it out. I think the last max I had was like 250,000. It might have been more than that.
Did you have to do extra to get more life insurance?
I had to pay.
I remember with mine, I had to get a physical.
Yeah, sometimes they ask for a physical if it's more than a certain amount. But at the end of the day, like they give you a certain max that you can get to that you don't have to worry about that. I would always pay up to that particular max. I think I was overspending for that policy.
See,
to be
and
honest,
that's the thing.
I was spending $36 per pay period for $250,000. It was like it came out to like almost $60-something. And what was happening was that's $250,000 that doesn't have living benefits. Now that I look at it, I think about it, it doesn't have the living benefits that I need if something were to go wrong, as well as if I lose that job, that $250,000 is void. Yep. I don't have it anymore.
You paid into it, and that's almost like worse than a term because
because a term has its benefits.
Have its benefits to it, but no, like worse than a term as in we know that it's temporary. Mm-hmm. We know it's 20 or 30 years. With being fired or anything, you didn't know it was coming. You know what I'm saying? Yeah. So you paid into this through your employer. And if once you let go, that day you no longer have life insurance. Literally that day.
Can I say that? That's just life insurance. But if most people took a permanent policy outside of their job, took 5 to 10% of their annual salary and put it into that permanent policy, and be disciplined for that, if they were to lose their job, they will have money in a life insurance policy that they can take money out if they got fired. Yeah, while you waiting on unemployment, you got $10,000 in this bank. Say, I need to pull out $2,500 to get me through this time until unemployment comes. That's money that's undetectable. IRS is not coming for them because it's already been taxed, and it's there.
Now, are they going to be taxed on this? Are there's some penalties that come with that?
It's penalties if you pull out a certain amount. So you need to have a educated and qualified broker or insurance agent
like yourself
that can explain that to you. Now, I don't care if you come to me or go somewhere else. You might not be my client, but at the end of the day, you need to have somebody that's going to educate you on what that means and why we do that.
Absolutely. You said that was a great way of explaining that, babe. Now, I do want to say that with these employer plans too, at the end of the day, you don't get a certificate for having this life insurance because generally a certificate of insurance goes to the owner of the policy.
Right.
And the owner of that policy
is the employer.
Please make sure you understand that. You don't own the policy. You're paying into the policy. but they own the policy.
They have the certificate.
They have
hold
the certificate of insurance. You don't. That's why you get proof of your retirement panned out and you get proof of your health insurance, but there is no proof with your life insurance because they hold it. A lot of times I'll ask people, okay, if you have it with your employer, how much do you have? The number one answer I get is, I don't know.
Mm-hmm.
A lot of times. I don't know, or I think it's about this much. Then the last one is, oh, it's my salary times 5 or my salary times 10.
Yeah.
Now, for those people who have that, if you know that they're not going to fire you and you're not going to quit and you're going to work your 25 years here.
We have a worker in Chicago who was 70 years old.
Yep.
And he got forced off the job. And we've said this before in our
Early
previous
retired. It was about a year earlier for his retirement.
They forced him to retire, and instead of him being able to get the full package that allowed the life insurance, they cut that off, and all he had was $2,000 worth of life insurance.
And they cut it off because he didn't fulfill those years he needed to have in order to receive that policy for his life insurance. So even for the people who there are some people who worked, retired, and got their package for their life insurance. That is true. But for individuals like that, where he was forced into retirement way earlier and was supposed to get this amount that was based off his salary, but didn't get it because he retired.
They forced him
into retirement a year earlier. That he was 70 years old with $2,000 worth of life insurance, people.
And this is a healthy guy.
A healthy 70-year-old.
But because he's 70 years old, no insurance company is going to touch him for the type of amount that he needs in order to leave the assets that he was trying to leave. I
ended up finding a policy for him. He was able to get coverage because 1, he was healthy. 2, he had good habits. But that last one, age.
Death benefit wasn't as
70.
much.
So the death benefit wasn't as high. And it was really expensive.
Yes, it was.
Simply because of his age. So this is why alone, like that's a story we gave you guys, but alone, having a policy outside of your employer, I don't care how old you are. I honestly don't care how old you are. Just have it, because for some of them, I think they give them a basic $25,000 that you don't even have to pay.
The employer gets a tax write-off on that.
Gets a tax write-off on it. So if they giving you a basic $25,000 life insurance policy with your employer, cool. Go over here and get your own that you own.
And it doesn't have to be that much.
It doesn't have to be.
It could be $75,000. It could be $100,000. But you need to have something.
Something in place. Now, as we talked about the different types of policies and the misconception of having it with your employer or you being young, what would you say to? Remember, we had a baby boomer, and he's like, I don't need to get life insurance because I'm leaving real estate to my kids. I got buildings, and they're going to have these buildings, and they're going to be set. What would you say to that?
I would say you need to think about the full strategy. Most people who leave real estate have to set it up correctly where any estate tax will be taken care of by the life insurance policy. The life insurance policy is still there as an asset, as a bucket of money that helps pay off real estate if it's not paid off already, or pay the taxes, the estate taxes that might come from the government, depending on how you set it up.
Okay, so I do know the question I always like to ask for individuals who do feel that way is, if you're leaving this real estate, which is great because some people can't leave, anything, but the fact that you're leaving that real estate is great. But are your kids that you're leaving it to, or whoever you're leaving it to, are they in position to pay that mortgage or to pay the taxes that are on that property?
Mm-hmm. Many people lose. I've seen people lose businesses because they didn't have the life insurance. I've seen them lose homes because life insurance wasn't set up. I've seen spouses lose a home after they just got married to the husband and they just bought the property together. They had to lose the house because the husband was the breadwinner. And, anytime you buy real estate, as a person who wants to leave wealth to your family, you need to have an insurance policy to back up the asset that you bought.
Yes, absolutely. So if you're making, let's say, $55,000 a year, your life insurance policy should at least be at minimum $100,000.
Yeah, you should hold at least
At least that, because that's the amount that you're bringing in to support your home, your family, your kids, or anything like that.
And that's income replacement. But what we're talking about here is we're talking about mortgage protection.
Mortgage protection.
So
absolutely.
even if you have a life insurance policy with your job, if you own property, the policy that you would get is the value of that property. So that same term policy, we got return of premium policies where you put 30 years on your mortgage, you put 30 years on this term policy, pay into this term policy for the 30 years. If the 30 years expires, you get all your premium back. But at the same time, if it doesn't and you still got that money, it pays off the property.
So that would help out. So that would help out a client who's saying, I have real estate that I can leave my kids. They can have something like that set up in place for their property, for their children, so that in the event they do pass, that money could just pay off that property. And
if they don't, it's a big lump sum payment back to them, which is tax deductible. You don't have to worry about taxes on it because it's already been taxed and they get the money back. You don't have to worry about it. And the property is theirs. Now they have a big lump sum of money. They can do whatever they want to do with it. If it's going to buy another piece of real estate, if it's to gift it, if it's to take it and put it into another insurance policy because it's alienatory. So you got $30,000, $40,000 left of whatever you spend into this $100,000 policy. You got that money that you have in your account that you can do whatever you want to do with it.
Nice. See, this is why we educate. This is why we're educating. Now, my one more thing that I did want to bring up is, did she go to sleep?
She did a lot of hollering, and she went and sucked her hand to sleep.
Should I put it in the playpen?
Well, we could. Let's go ahead and finish it out.
All right. So, okay. So overall, with life insurance, of course, there are a lot of options for you. One, you don't have to worry about, it's too expensive. I'm not worried about getting life insurance. There's always something that can fit and work for you. Again, it's based on your age, your habits, and your health. 3, don't just solely rely on your employer life insurance plan. There are so many other things that you can put in place, and there are so many things that don't come with your employer plan that you can get on the outside that could probably be the same price or even less if you're paying more into your life insurance policy through your employer. And consider getting it while you're young. Lock in that rate. And even if you have children who are this young, she has her policy already at this rate, and it could be that same with the policy we have. As she grows, it'll grow with her. But in some cases, if we wanted to have like an extra whole life policy for her,
it's cheap.
She'd be paying that same rate at
$15,
$30, 30 years old, 40 years old. She'd be paying the same rate from her at 4 months old. So
yeah, I think we should do another episode and talk about.
We're going to do an episode talking about
$1 Million Baby,
$1 Million Baby, and families, as in husband and wife policies.
Yeah,
strategies for you to build this generational wealth. Because at the end of the day, we preach generational wealth, but we like to educate you on your current wealth before we push out to you having this generational wealth. Would you agree?
Yeah, I would say that insurance is not the only way. And I think, a lot of people get mixed up with insurance being the only way that you leave wealth, but insurance is the most cost-effective way to leave wealth. With investments and everything else that you have in your bucket. I mean, right now we're getting ready to hit the stock market as stocks are about to come out on discount. What we're going to be doing is we're going to be able to take a portion of that money that you've made, and then you need to invest in some life insurance to give yourself and your family a hedge against any type of loss, and knowing that you're paying pennies for dollars.
Well, if you're still on the fence about life insurance, understand that life insurance is literally protecting you, your family, your future, your assets, everything with you guys. So again, it is Life Insurance Awareness Month. This is literally our first episode talking about this. We're going to talk about this for the entire different ways for the entire month of September, different tips, different strategies that you may have note of. But if you need any help, you can reach out to us, contact us. We'll have the website, our emails, everything posted there. And if you have any things you want us to talk about that you do have interest in, let us know that as well. All right. Again, my name is Katina.
My name is Vernon. This is Sleeping
Journey. And we want to thank you all for listening to Marriage, Family, and Business.
Thank you, everybody. Have a blessed one.
Marriage gets hard when you disagreeing. When God's in the center, he's refereeing. Talk about triggers and traumas while having date nights at the gym and the sauna. To business meetings discussing the health of the wealth to the season of commerce.
New